I
Good morning,
was hoping
David,
to get
good
straight to
morning,
it
Yvonne.
and hoping you could give markets a little bit of guidance on your timetable on normalizing policy. I mean, would the BSP be open to thinking about raising rates by the second half?
Well, we closely monitor the developments abroad, and I know most of my counterparts in Latin America and Europe and even in this part of the world, they have started tightening. But we have decided to wait a little bit. And we just had a policy meeting. We continue to set the rate at 2%. So I think we still have room to maneuver because the inflation outlook looks good. And that, of course, growth also is picking up and unemployment is going down. So we'll wait until what happens in the U.S. and the extent to which they will tighten.
I was about to ask you that, and I'm glad you brought that up, Governor, because on the weekend, I'm not sure if you saw, economists from J.P. Morgan now expect the Fed to hike 9 straight times. If they're correct and the BSP holds, that's going to take the Fed's rate above the BSP rate, I think, for the first time in as long as I can remember. How quickly is that window for the BSP to sit in rates closing?
Well, if you look at the inflation rate in the U.S., it's 7.5%. Our inflation right now is 3%. So you have to consider that the real interest rate is what matters. And we evaluate how the Fed's rate will affect our output and of course our inflation rate. And by the way, we have already actually, without saying this publicly, we have started our own version of the adjustment. For example, our assistance to the national government, which was in the neighborhood of 540 billion pesos, we have toned that down to now 300 billion pesos. And also our participation in the government securities market, we have during year one, which is 2020, we were holding something like 22% of the total volume. It's now down to 4% last year, 2021, and now first 2 months of the year 0.25. So we're having our own version of slowing down our assistance to the national government.
And Governor, you did speak to us just about a month ago, saying that you prefer to see maybe 4 to 6 quarters where you see steady economic growth, unemployment around 5% before raising that key rate. I just wonder, where are you in terms of those thresholds now? Are you close to hitting them at this point? What's your take?
Yes, as I mentioned, unemployment is going down, despite the fact that labor participation rate is up. So we're okay along that path. GDP grew in the last 3 quarters of what are the third and the fourth quarter. So we have 2 more quarters to look at, and so we're just right where we want to be. And so we have another policy meeting next month that will coincide with the Fed's meeting. So we'll have the time to evaluate the situation. And I tell you, we monitor the situation almost daily.
Okay. What do you think is the biggest risk to growth this year then, Governor? Is it more about global financial conditions that are tightening, or is it runaway global inflation as well? And with that, are you still confident that you can hit your growth targets?
I think it's still COVID. We don't know whether there will be sufficient vaccines going the entire world, because I know the uneven distribution of vaccines. So we don't know when the whole world will be vaccinated. And of course, now the political tension in Russia and Ukraine, we don't know what will be the end game there, right? And so those are the two to me, the major determinants of where we'll be this year and next year.
Right, and on the COVID aspect, Governor, since you brought it up, can investors be fully confident that the Philippines will not re-enter lockdowns, given the information, of course, that we have right now?
Good you asked that, David. If you look at the foreign direct investments, January to December or to November last year, it went up by 52%. That's higher than the full year of 2019 and 2020. So there's a lot of confidence in the Philippines. I think it has, because despite the COVID situation, we continue to look at the what is needed to attract more investors, and that's of course our build program, and we passed measures that's going to attract them, like the Public Service Act, amendments to the retail trade, and the amendments to the Foreign Investments Act. I think the next government will have an easier time because of all these reforms that we did despite the pandemic.
Governor, now to talk about the exchange rate, as I'm sure you've been monitoring almost daily, as you alluded to there, it's really been on the weaker side. And the reason I simply bring that up is, a stronger currency does have the benefit of keeping inflation out. Are you still comfortable with the current exchange rate, or is it on the weaker side?
The macroeconomic assumptions, we're not targeting any exchange rate level because we are adopting a flexible exchange rate. The macroeconomic assumption is 48 to 53. So we are comfortable where whatever the market bears. So should we be concerned with the slight depreciation of the currency? I think no. We should not be concerned because that's what the market rates, market supply and demand dictates. And because we also have a very strong macroeconomic fundamentals. Our gross international reserves is equivalent to 10 months worth of imports. The receive doctrine, as you know, is if you have 3 months worth of imports, you're covered. And there is a steady supply of, or rather inflows of dollars to the country, for example, coming from overseas Filipino remittances, business process outsourcing, foreign direct investments, which I said pick up by about 52%. So to me, we're happy where we are right now.
So has there been any sort of intervention strategy in the FX market? Has that come up of late? And maybe another follow-up question, how do you think the Philippine election could actually impact the currency?
That's a good question. We were intervening, I must admit, at the time when the peso was moving towards 48, because that's really not good for our exporters, and it's not good for our overseas Filipino workers. But right now, there's very little intervention, if at all. Now, on the elections, I think the next president should do well by emphasizing continuity. President Duterte's popularity rating at this late in his term, final days, is very, very high, which means the Filipino people must like what he's doing. Also, the foreign direct investments, as I mentioned, is coming in a bigger way. So maybe the foreign investors like what we're doing. So I think continuity is the name of the game.